How's it going, everybody? It's Stas here. So we had a pretty choppy day in the markets today. We had the S&P down 0.2%, the Dow went down 0.6%, we had the Russell down over 1%, and the NASDAQ 100 ended up breaking even. So today, we're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, and check out my Patreon. If you guys want all my moves in the markets, that's on Patreon, link down below. And you could also get 50 free bucks from M1 Finance, also linked down below. And with that being said, let's get right into the video. So even though we had a red day today, other than QQQ, which, come on guys, 0.05%, that's barely a green day. That's pretty much break even. You know, even though we had a red day across the board, the chart on SPY still looks pretty decent for the bulls. And let me explain what I'm seeing here, right? And honestly, nothing much has changed from my previous video from earlier today, but I'm still going to cover it here for you guys. So on the 10-day chart, we're noticing yesterday we broke the highs from the previous day, which is good. And today, even though we pulled back, we still ended up holding a higher low above the 180 SMA, and we pretty much consolidated above that all day. We were choppy above it all day, and now that I'm thinking about it, the VIX was probably up a decent amount. Yeah, the VIX was up 4.5% today. It pushed over 17. So even though we had a red day, we still held a higher low on the 10-day chart above the 180 SMA on SPY and on QQQ. So for me, hey, that's pretty good. Not too shabby, right? Again, even though we had a red day. Now that I'm looking at triple Q, this actually closed above both moving averages. Unlike SPY, you guys can see it closed above the 50 SMA and above the 180 SMA. And this actually hit a fresh high today. Not a brand new all-time high, but it hit a high from the past, looking at the past couple of days, we hit a high today. We hit about almost $400 per share. Yesterday's high was $397. The day before, we hit about $396. So the fact that we're breaking highs on triple Q and we pulled back a bit, that's a pretty good sign to me. It's looking pretty bullish here on the 10-day chart. And if you guys disagree with me, please let me know in the comments. I don't want to be surrounded by a bunch of yes men. If you disagree with anything I say in my videos, please let me know down below in the comments, and make sure to hit the like button if you haven't done so already. And with that being said, let's talk about some stocks, because today, guys, we had some earnings reports. And if you all remember, yesterday we had some earnings reports as well. We had what? Home Depot and Walmart, and both of those did pretty well. They had same-store sales up a good chunk over the past quarter, and both of those beat estimates from my memory when it comes to same-store sales. And we'll talk about Target and Lowe's here in a second, which both did pretty well from what I saw, guys. But first, before we talk about those, let's talk about the mighty old Nvidia, ticker symbol NVDA, which has been one of the hottest, probably the hottest stock in the markets, other than Tesla, maybe AMD. Honestly, I'd put AMD, Tesla, and Nvidia as the three hottest stocks in the stock market over the past 1-2 months. I mean, look at Nvidia, guys. It went from $200 about a month and a half ago, and it just recently hit $330. So it's ran up $130, and now it actually went down about 3% on the day. Closed at $292, but it's up now to over $300 after hours. It's up to $306 after hours. So let's pop up the live news tab and see exactly what they ended up reporting. So where is it here? Here it is, guys. Q3 adjusted EPS came in at $1.17 versus $1.10, so that beat. Revenue came in at $7.1 billion versus $6.83 billion. That also beat. And do we have any guidance? Oh, yes, we do, guys. Oh, yes, we do. Q4 sales, they expect $7.4 billion, which is a lot higher than the $6.86 billion estimated. So not only did we see a double beat, but they're also guiding up for the next quarter, which is fantastic. And it seems like gaming revenue also beat $3.22 billion versus the $3.16 billion that was originally estimated. And yeah, I mean, that's pretty much the highlights that I'm seeing right here. Company says crypto mining processor revenue was $105 million in Q3, which is a very small fraction of the overall revenue, but still $105 million from crypto mining processing revenue, which is not too bad, and I'm sure there's a bright future for that particular segment of the business. So at this point in time, it seems like Nvidia hit 327, which we talked about. It pulled back a bit. Now we're seeing some choppiness. Recently, the past couple of days, probably close to a week, we've been seeing choppiness, and now it seems like we're breaking out of the consolidation choppiness phase. And who knows, this earnings report, even though Nvidia is pretty overbought, and I'm still sticking to that, in the very short term, this might start going 310, 315, 320 again. It's very possible. But for me, being more, I would say, of a conservative trader, I would want to see it down to 245, honestly. And ultimately, I think that's where it's going to start going, whether it's a week from now, 10 days from now, a month from now. I have no idea, but the next time we see a little bit of weakness in the markets, you guys know how it goes. The high multiple stocks get hit the most, Nvidia being one of them, and I would see this go down to 240, 250. It's very possible in my eyes, but in the meantime, in the very short term, I'm talking next day or two, we might see a pop up even higher, which I know it might be crazy, but in my opinion, it's very possible. So that's Nvidia. Now let's take a look at Target, and these earnings came out in the morning, and I already saw them. They were pretty solid from what I remember. Let's go down here and see. They did $3.03 EPS versus $2.83 estimated, so they beat EPS. Revenue came in at $25.29 billion versus $24.78 billion estimated, so double beat when it comes to Target. And remember, like I said, Home Depot and Walmart, if I could say it right, both of them did well when it comes to same-store sales growth. Target did as well. Q3 same-store sales were up 12.5% roughly, and the estimate was about 8.2%, so that beat. And we had digital same-store sales up 29%, which is great. Cost of sales growth of 17.4%, outpaced revenue growth of 13.3%. What else do we have here? That's pretty much the highlights, right? When you're looking at companies like Target, Home Depot, Lowe's, all those retail-oriented companies, restaurants, same-store sales is important, which, again, we covered it. A lot of these companies are beating and outpacing the estimate for same-store sales, which is very good. And on top of that, Target had a double beat, which is also pretty solid, and the stock went down. And it makes sense. I mean, look, Target, the stock was already at all-time highs damn near. We were right there, and it was pricing in a lot of good news, probably. I mean, good earnings as well. So they reported the earnings, and the markets kind of sold the news, if that makes any sense. Now we're pulling down towards the 180 SMA 4-hour chart in the mid-200s. That could be a dip buy in the very short term. We could see a push. Who knows? Maybe back up 265, 270 is very possible. So watch out for Target. Lowe's is another one, which I also saw these earnings, guys. They did well, and the stock went to all-time highs. It hit 255 today, and if I pull up the live news tab, if we go down a little bit, let's see here. They did EPS of 273 versus 235 estimated. Sales came in at 22.9 billion versus 21.99 billion estimated. So double beat for Lowe's, which is solid, and I believe their same-store sales was pretty solid. U.S. comparable store sales up 2.6%. I'm not sure what the estimate on that was. Here it is. The estimate was 1.3% down, actually. So analysts thought their same-store sales weren't going to do as well. But again, they beat. So all these companies, guys, again, like I've been saying, Lowe's, Home Depot, Target, Walmart, they're all doing pretty well. And Lowe's, it's pretty overbought. It's kind of in the same category as Nvidia, where I would like to see it down towards the 180 SMA 4-hour chart, 220, 225. That would be a better dip, in my opinion, and I'm going to be patient. I have a decent cash position, 20, 30% as of now. Probably will increase that if the markets continue going up. I'll take profits, build up my cash position, and I'll be waiting for these stocks to come to a more reasonable level. So Lowe's is solid. Good earnings. Let's see Cisco. Cisco I didn't actually see yet. Oh, man. That's tanking. Whew. We got to talk about that, guys. Let's see here. Cisco is down to 52.95 after hours. It closed at about 56.75. So let me pop the live news tab up and see exactly what the heck they ended up doing. Probably not too well, obviously, considering the stock's down. So they did EPS of 82 cents versus 80 cents estimated. Sales came in at $12.9 billion versus $12.98 billion. So they barely beat EPS. They missed on sales, and their guidance has to be low. Let's see here. Did they even give out guidance? Oh, they see full year 2022 adjusted EPS of 385 or 338 rather, to about 345 versus 342 estimated. So that's up a little bit. Sales growth they saw about 5 to 7%. Year over year. Actually, no, that's the estimate of sales growth, which is not too bad considering Cisco is a big company. And it looks like they authorized stock repurchases of $7.7 billion with no termination date. So like I always say, when companies buy back stock, you know what happens? Well, your existing shares become more valuable. It's that simple. So there's a certain amount of shares outstanding out there, right? You might own some Cisco, and if the shares outstanding goes down, the number of shares out there goes down, your piece of the pie, your shares of Cisco, just simply become more valuable. It's just that simple. So at this point in time, it's pretty oversold, right? Very oversold at that. And one thing worth mentioning is this is a falling knife. You know, it's really not finding any consolidation yet. And it makes sense considering they just reported earnings about an hour or two ago. The stock's tanking right now. So it needs a couple of trading days to kind of find a support level. And I do have this, trend line drawn out right around 53, 52 bucks. Hey, maybe if we find support here, consolidate, let the dust settle a little bit, Cisco can make its way back up towards mid-50s, high 50s. It's possible. So keep your eyes on Cisco. BBBY, triple BY is another one that I'm looking at here. It's quite interesting. And full disclosure, this is one of the stocks out there that's pretty much like a gamble. It's kind of one of the short squeeze stocks. You know, I've covered it in my short squeeze videos that I make pretty much every week at this point. And by the way, I made one earlier today. If you guys do want to check it out, watch it after this video. Triple BY, Bed Bath & Beyond. It looks like it's making a move here, guys. It went up about 1.4% on the day today. And after hours, it's up even more. We're seeing a bit of a pop, a short squeeze, if you will. Maybe it's a little mini short squeeze. I mean, the stock went from 23 to the mid-24s in the snap of a finger after hours. And I believe if we break 24.50, I'm going to put my alert right there, which not only was the high from after hours today, but also from the beginning of the day today during the session and yesterday. Wow, this is pretty interesting, right? Look at this. We double topped yesterday after hours at 24.50, at market open today pretty much, and after hours today. So if we break out of that level, I think triple BY is going to go to the moon. Okay, maybe not to the moon. I don't want to tell you guys, oh, it's going to 50 bucks. I have no idea where it's going, but I could say for sure momentum's going to kick in at that point. We're probably going to touch 30 again. That's in the cards. So keep your eyes out on triple BY, but again, it's very risky. Be careful. These stocks, it's really risky. If you're a degenerate gambler, hey, you want to go have some fun, treat it like Vegas, Atlantic City, which sucks these days, but it has a lot of casinos there. Hey, you can go all in on triple BY, guys. So the next one is MicroStrategy, which has been taking a beating recently, and this is kind of not extreme. Okay, it is a little correlated to Bitcoin, let's be honest. This stock has become like a Bitcoin ETF in a sense because they own a lot of Bitcoin. MicroStrategy does. The CEO is Michael Saylor. You guys know Michael Saylor. He's probably the most bullish guy on Bitcoin that you could find out there, and he has some pretty crazy not saying his ideas are crazy, but he is crazy in that one direction, right? He's like one of those guys that's all in on something, all in, and his thing is all in on Bitcoin. He has that kind of laser mindset Bitcoin, right? And the stock is kind of tied into Bitcoin, obviously. And Bitcoin has been going down recently. I think we hit $69,000 when the Fed number came out, or the inflation number came out, rather. And now it's under 60,000, so it's down, what is that, like 15%, 20% even, if my math's right. And the thing is, when Bitcoin goes down a good chunk, MicroStrategy goes down even more for the most part. MicroStrategy, actually, no, it's down about 17% in this case, but it sometimes goes down even more than Bitcoin. And at this point in time, it's at a decent dip, in my opinion. You know, we're holding above the 180 SMA on the 4-hour chart, where buyers have stepped in over the past half year, since May, early May, early June, actually, too. So if we see a repeat of history, guys, we get oversold, which we pretty much are oversold right now. We start going down to 700, 720. This could end up being a nice dip buy, and maybe we see some momentum back up towards 800, 900 per share. That is definitely possible, in my opinion. So set your alerts. Put this on your watch list. It's volatile. Be careful, but I believe there could be some money made in this one. So the last one for today is Weight Watchers, which I got in my comments, I believe, or was it an Instagram DM? I forget. One of you guys shouted Weight Watchers out to me. You wanted me to talk about it, and this one looks like it's reversing right off the bat. Even though we went down 2.5% today, it looks like it's finally reversing out of the multi-month downtrend that it's been in since the middle of June, early mid-June, where we hit $41 per share. And this is a company that, just judging on their, not this past earnings report, but the one before it from the middle August, they didn't do well. The stock got destroyed, dismantled, whatever you want to call it, right? It went from $31 down to $23 in a day. That was a 30% drop. And then it proceeded to going to the teens, $16, and they just reported again, and now we're popping back up. So what I'm thinking is they just reported decent earnings. I didn't see the earnings. Actually, no, they didn't. I mean, they double missed. They did 65 cents versus 73 cents EPS, and sales came in at $293.5 million versus $314 million estimated. So double miss, but it's still going up. And what that tells me is the stock priced in such negative news already. It's gone down so much already that even a negative earnings report can't make it go even lower. So in a sense, in a weird way, I guess that's good news, right? They reported earnings. Investors are having a sigh of relief, and the stock's starting to go up. I mean, that's kind of what we're seeing here. And again, we're above both moving averages. We're seeing a golden cross slowly but surely. So would I trade this? I don't know. Maybe a day trade, maybe a short-term trade, but I would be a little bit hesitant to go long, considering they haven't had great earnings reports the past two quarters. And there's it's kind of like there's a negative cloud around this company. And when I'm looking at trades, swing trades, stocks I want to buy and hold for a month or two, a couple weeks, I don't really like getting into companies that have a lot of negative spotlight around them with negative earnings, negative guidance. That's kind of a recipe for disaster from my experience. But maybe a short-term day trade could definitely be in the cards with Weight Watchers. So I'm going to put my alert at, let's say, maybe 21 per share. We'll see what it does if it cracks above 21. And make sure to leave me a comment down below, guys, if you do want to see or if you do want me to talk about other stocks, stocks that you're looking at. Drop me a comment, your watch list, ticker symbols you want me to cover, and I'll take a look at them and talk about them in the videos. So that's pretty much it. I'm going to wrap it up here. If you all found value, hit the like button, subscribe. Again, leave me a comment down below, and check out my Patreon. If you guys want all my moves in the markets, more content, exclusive content, morning update videos, exclusive access to me throughout the day via DM, all of that is on Patreon, link down below, or you can go to StasserFest.com/Patreon. Make sure to also get your free money from M1 Finance, $50 from M1 Finance, link down below. And you guys can get 2 stocks from Webull up to $1,600. Again, that's linked down below. And with that being said, I'll catch you guys in the next video, which I made 2 videos earlier today. One about Rivian from the morning. Watch that if you didn't watch it yet. And the other one is about 3 stocks about to squeeze. Watch that one too. I'll catch you there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there, guys. Peace out.